Good morning, everyone. I'm Randy Pomfrey,
And I'm Brian Sachs.
and we're here to tell you about stop renting and start buying your home. The secrets to stop paying rent and finally own your own home. Brian, why don't you tell us a little bit about yourself?
Sure, I've been in the industry for 33 years. Hard for me to even say that, Randy. But it's funny because when I started, rates were 19% and just on their way down to like 14%. So we're really in historic interest rates. And I know some of the viewers may have seen me on Channel 11. I'm the in-house mortgage expert for Channel 11, and pride ourselves on really helping buyers understand the process, learn what their options are, and get their piece of the American dream of home ownership.
Yep, definitely. I've seen you on TV myself sometimes when I'm up early enough.
There you go.
Um, And I'm Randy Pumphrey with Cummings and Company Realtors. I've been doing this for 13 years now. We've got a team of people ready to serve you, and we do things a little bit differently than a lot of realtors. We like to sit down with our people ahead of time. It's funny how crazy an idea that is to the industry, but we like to sit down and actually have a plan with our clients so that they can find the home of their dreams quickly and without a lot of heartache. So, having said that, we're going to jump right in. Who's ready to own your own home? Grab your handout. If you haven't gotten your handout yet, please visit marylandhomes.pro/workshop 2. Please turn off your phones and close Facebook or any other sites you have open so you can learn the secrets to being able to finally stop renting and own your own home. Here's what we're about to tell you during our seminar today. You're about to learn about the three types of lenders and which one is best for you, how to take how to get more take home pay out of your mortgage, to pay for your mortgage, sorry, messing up today, and types of financing, which one is best for you. So those are the three things, first three things you're about to learn. We're also going to learn about how to buy a home even if you don't have perfect credit. And I think this is the one that a lot of our callers today are interested in, and I'm definitely interested in finding out more about myself as well, and costly mistakes to avoid when buying a home, and the one document that increases your negotiating power. Here's the reasons that people rent. You're new to the area, you don't know where to live yet. Definitely a good idea to get a feel for the area. But you don't want to get trapped in renting for years and years and years like many people have. They moved to the area 5 years ago and they're not new to the area anymore. So it's time to, buy a home. They don't have enough money for down payment and closing costs. That's one we hear every day. That's probably only second to I've got bad credit, which is, of course, number three. You've had past credit issues. You think it's too hard to qualify for a mortgage loan. You've got naysayers around you that are telling you you can't afford it. Don't worry about it. It's too much. Oops, it's too much hassle. It's not for you. Don't listen to them. And then they think they can't afford a mortgage payment. Brian's going to share with you today how actually a mortgage payment is probably going to be less than your renting payment. As far as your purchasing timeline, just going to hit the highlights here. You start by finding out what you can afford. You start right where you're at right now with us, your lender and your real estate agent. You find out what you can afford, if you can afford it now, what's your timeline. Then you find a real estate agent, hopefully me, obviously. You find a house, negotiate the contract terms. You shop for your loan. You compare which types of loan are best for you. You obviously listen to Brian, and he's going to give you tips on what type of thing you can, what types of loans you should go with that are going to give you the best deal. Then we go through some of the steps about, getting the house and shopping for title agents and stuff like that. It's a little bit beyond the scope of this call. But once you get your loan approved, you get your insurance, do your final walkthrough, you go to settlement, and at settlement, you get the keys to your new house. And you're happy as a pig in poop because you're living in your new home. Brian's going to tell us a little bit now about some of the programs that are available for you and some of the different loan items that you can use.
Okay, so the first program, there's really three or four different major programs. And knowledge, folks, is power. And that's why Randy and I have put this workshop together so you have the knowledge. So one of the programs is FHA, that's the Federal Housing Administration. The pros to this program are that you can put down a down payment as little as 3.5%. Those funds actually can come from grants. They can come from tax returns, which I know many people are getting this time of year. What better use, Randy, of a tax refund than getting your piece of the American dream and building really, I guess, even an investment portfolio of property because your wealth will be contained in real estate.
Exactly.
It's easier to qualify. These loans are assumable. Some of the downsides, the appraisal standards are a little stricter. But one of the things I will tell you, the real opportunity right now may be some homes that need a little bit of work. And if they do, Randy and I are expert at helping you be guided through a program called a 203K renovation loan. So if you find a property in a great neighborhood and it has everything you want, but it might be a little ugly, or may need a little bit of work, well, don't worry about it because we can help you get into that property with one loan to buy it and make all of the renovations. I mean, think about it, your own kitchen, your own bathroom, the carpet color you want, the paint colors you like. So that's a little bit about the FHA program. The next program we're going to talk about is the VA loan. And honestly, if you are a veteran, there is no better program out there. We thank you for your service to this country. If you are a veteran or a veteran and a spouse or a reservist that has 6 years of service in the reserves, there is zero down payment. Very, very liberal qualifying ratios. And actually, you really can get into the home with zero because Randy can negotiate asking the seller to assist you with closing cost help. Believe it or not, we as a lender can even contribute towards your closing costs. So folks, if cash is your challenge, don't let it be. Randy and I have a lot of creative ways to make it work for you. Next program up is a conventional loan. This is your standard type loan. And actually, this has 5% down, but there are programs now with 3% down, and you don't have to be a first-time buyer. Conventional is just your standard financing. You may hear in the news information about Fannie Mae or Freddie Mac. Their guidelines tend to be a little bit stricter in terms of credit and in terms of qualifying. And actually, Randy, there's one slide we didn't put up, but there is another program called USDA. And if you want to buy in a rural area, you could use a USDA loan. This is a program that allows also for 100% financing. So lots of options, lots of programs out there. And again, if you are looking for funds, there are a number of grant programs, both locally and statewide, and even nationally, that Randy and I can put you in touch with.
Hey, Brian, let me jump in there one minute and just want to say, the amount of loan programs that are out there are probably not quite as numerous as the stars in the sky, but it does seem like it. And I think people that are listening to this call, their best bet is just to talk with you, go over everything, and then you can help them with picking the right one that is going to be the best choice for them. Because like you were mentioning with the rehab loans, about a fourth to a third of the homes out there probably would qualify for that program. And it is a great way to get an inexpensive house and fix it up the way you want. And since there's so many programs out there, I don't want callers to think that they have to look at these slides and go, I don't know which one to pick, because you're going to guide them through every step of the way.
Well, you're exactly right. And, if you go back to the clock, can you go back to the clock for a second? Number 7. So, Randy, you and I are always, just to your point, we're always joking around, who listening to this or watching this would ever give us $1,000, right? $1,000 if we promised in writing to never, ever give it back to you, right? Yeah. And so, that's why you want to sit down and meet with a lender and meet with Randy. And, we're both old school. We want to sit and meet with you and understand your particular situation. You're right, Randy. Don't get caught up in all the programs. We'll customize all of these options, explain them to you, and help you pick the right one for you. But it all starts at number one. When you purchase a home, if you don't have your financing in place and you don't know what you're doing, you could lose $1,000 because you're going to pay for inspections, you're going to pay for an appraisal, and you don't get that money back, folks. That money is paid to those service providers, whether you buy a home or not.
Right.
So, all right, just wanted to make that point, Randy. So we left off talking about, some of the programs, but what do you do if you don't have enough money to buy a house? If you don't have enough money for down payment? Well, there are different ways to do this, and I think right now we're on slide 11, if I'm not mistaken. So what do you do?
Well,
You get
we finished conventional loans.
correct.
Right.
Okay, so what do you do if you don't have the money? It's a very common issue, right? So you can get a gift from a relative. As I said, a lender, we as a lender can actually give you money towards closing. There are numerous grants, and Randy is expert at structuring a contract where the seller could assist you with closing costs. So again, if cash is your challenge, never let it be. Moving on, one of the next challenges that people face is, look, in case nobody realizes it, we had a meltdown a little while ago, right? And we had some economic challenges, and people had issues. There were bankruptcies, there were foreclosures, there were short sales. So, here's a couple that we helped that had a bankruptcy. They had a foreclosure, and what changed is they're now reestablished. What we want to see is that you've reestablished yourself and you're back on track. You're out of the situation you were in and you're moving forward. And not to pat myself on the back, Randy, but I'm going to anyway. Honestly, I am the expert nationally on this topic. And in fact, I wrote the book about it. So the book is called Yes, You Can Get a Mortgage. And so if you've had a credit challenge, honestly, don't let that stop you. If we can't assist you right now, we'll tell you what you need to do to go forward, and we'll stay in touch with you to help you get there. We're not a credit repair company. I have to say that legally. We're a mortgage company. But don't let credit be your challenge. There are many ways to easily boost credit scores.
And I think a lot of people, you have to remember, for the people that are listening to this call, you declare bankruptcy so you could get a fresh start. So don't just leave it there. You got a fresh start. Give Brian a call and see how you can really make a fresh start and move ahead and make something positive out of it.
So, here is a couple that we were able to help that needed money for down payment and closing. So, Joan really had great income and only two bills. She had a car payment and a school loan. She qualified for a $250,000 house, but she didn't have the money for down payment and closing, and she was not a veteran. And again, we were able to negotiate a contract where the seller helped her with settlement, and we got her a grant for some of the money with zero interest and zero payments, and Joan's a homeowner.
Yep.
We do these regularly, all the time. So here's something really big. What's happening right now, aside from people, we can overcome your credit issues. We can deal with those. We can deal with your cash issues. But what if you don't think you're comfortable? And so I want to explain some things to you. Rents right now are rising rapidly. I know anyone that's watching this right now that rents, you realize it, right? You could get a beautiful home in the same area for less, and have it be your own. You don't have to smell your neighbor's bad cooking. You don't have to listen to the banging on the walls. You don't have to worry about a parking space. I mean, you can own your piece of the American dream, and you don't need to make your landlord rich. You can make yourself rich instead. But you may have heard that people say buying a home is good for your taxes. Well, I have to give you the caveat. I am not an accountant. I don't play one on TV, but there are some things that I do know, and you can check this with your accountant. But generally, interest on your mortgage is tax deductible to you, and owning a home, you're going to have property taxes, and those taxes are also tax deductible to you. And so that's why you hear people saying it's good for you to own a home, it's good for your taxes because I got to tell you, aside from you not getting any benefit from rent financially, you're probably paying more in taxes than you need to. So, this is the time of year where you have people walking around either with a really happy face or a really sad face. I've been walking around, people got this like smile. I hate to say dumb smile, but it's like this silly smile on their face all the time. So if you are a person that gets a refund, I want to explain to you why you should be crying and not smiling, and how you might be able to use that refund to help you get a better grip on your finances. So the problem with getting a refund, number one, the government's had your money all year. And actually, it's more than a year when you think about it, right, Randy?
Yep.
Because if you're getting your refund in June, right, well, they've had your money January, February, March of the previous year. They pay you zero interest. So I hear people say it's forced savings, but you wouldn't go into a bank and say, please hold my money for 18 months at zero, not intentionally anyway. And number two, if inflation is at 5%, the money coming back to you is worth less. So every dollar you have coming back to you is worth 95 cents. So now it's even worse. Not only are you holding my $3,000 all year and not paying me interest, but when you give it back to me, it's only worth $2,500. That's horrible. And number three, you buy a home you may not be happy with because you want to stay within a certain level. And honestly, it's much better for Randy and I to explain this to you in person, and we're happy to. But I want you to understand the concept. So instead of getting a refund at the end of the year, every person who works for an employer, and you can move on to the next one, Randy, is going to fill out what's called a W-4 form. So very simply, if you made a budget and you said, here's what I bring home, go back one. Oh, here we go.
Sorry.
And, you have your expenses. You have clothing, food, utilities, insurance, car, kid, whatever it is. If you think you're comfortable paying $1,000 right now, but this home may throw off an additional $300 or $3,600 a year in refund, you can choose to get $300 more back each month. And at the end of the year, you wouldn't owe the IRS any money. You wouldn't receive any money, and it would be a wash. Again, you have to do this with your accountant's guidance, and this is only for illustrative purposes. But really all we're saying is whatever you get back as a refund, get it back every month to help you be more comfortable and have you widen your horizon of homes that you may be looking at.
Yep.
And go ahead, Randy. Did you have something?
I was just going to say, and the other thing too is for the people that are watching this, we've targeted certain rental communities where we know that these numbers make sense because we know what you're paying in rent, and we know that once you receive your tax refund, your mortgage payment is going to be far less than what you're paying now in rent. Plus, you're going to own your home and the myriad of other benefits that we've already described.
Absolutely. All right. So moving on, let's talk about different types of lenders and which one may be better or, may not be. So there are really four different types of lenders. I'm going to start actually with number 4, a mortgage broker. Now, a mortgage broker has no funds and may have a limited amount of products. So you want to be kind of careful dealing with a mortgage broker. Basically, what a mortgage broker does is shop your loan to various lenders. And as a function of that, well, if they don't charge you more than that lender, they don't make any money. So, the other 3 types of companies, number 1, 2, and 3, are where a mortgage broker generally goes, and they have to mark up that company's pricing. Going to number 3, a small bank. There are small banks out there. They are portfolio lenders, meaning Randy walks in with $100,000 and they say, okay, Randy, we'll put in a CD at 2%. You walk in and they say, okay, Mr. and Mrs. Smith, we're going to lend you a mortgage for $100,000 and we're going to charge you 4.5%. The problem with small banks and credit unions is they don't just do mortgages, they do all sorts of loans. they're generally only available during limited hours. And sometimes, again, their rules tend to be very, very conservative in many cases. And then there are two types of mortgage bankers. So the big misconception, I hear this one all the time and it makes me laugh, Randy. So I have clients who say, I've got $3,000 in Wells Fargo, and I'm not picking on Wells Fargo. So I got a checking account, Wells Fargo. I'm going to go check them out. Well, I mean, I hate to break it to you, folks. If you've got 3,000 in Wells Fargo, that's wonderful, but I don't think you're going to get any preferential treatment. If you have 30 million in Wells Fargo, then you probably ought to go there because they probably will give you some preferential treatment. But a mortgage banker basically is a company that lends you money for a mortgage. The misconception is that these, because you have a relationship with a bank, that you're going to get special preference on a mortgage. Here's the reality. Bank of America, Wells Fargo, PNC, SunTrust, I'm not saying anything good or bad about them, but they went out and they started mortgage companies, and guess what they called them? PNC called their mortgage company PNC Mortgage. Bank of America called their mortgage company Bank of America Mortgage, right? So there are bank-owned mortgage companies, and then there are independent mortgage companies. Our company is probably the fifth largest independent mortgage company in the United States, Homebridge Financial. And, you're certainly welcome to do your due diligence on me and them. But all we do are mortgages. And so as a function of that, we don't have all the extra hoops and guidelines in what we call in our industry overlays, extra qualification criteria that a bank would have. And as you see, we're doing this, at a time when most of the banks may not even be open. Certainly the small banks are not open. So you should know what kind of lender you're working with. Oftentimes, the independent mortgage banker like us tend to have the most product, and programs tend to be the most efficient time-wise, and also tend to be much better on the pricing scale, since all we do are mortgages. We have no other source of revenue. So if we're not competitive, we don't eat. And, for those of you who know me, I eat pretty well.
I think we've kind of hit this one a little bit, but you were saying that if you go into your bank, they're going to give you a good deal since you're a customer.
Correct.
You're going to get the same deal whether you're a customer or not there, and it's probably not going to be any better than anywhere else.
Correct.
So which one should you choose?
Well, again, my personal opinion is you should be working with an independent mortgage banker. Now, coincidentally, Randy, of course, I am an independent mortgage banker, but believe it or not, right? But the reality is, honestly, I think if you'll shop around, you will see that a independent mortgage banker is really going to be your best option, product choice-wise, price-wise, and so forth. But the real benefit is when Randy calls me and says, we want to settle on this day at this time, I'm able to control that because we are lending our money. So I can look Randy in the eye, and I can look you as our new client in the eye and assure you that it's going to happen.
Yep. So, and like Brian was alluding to a minute ago, don't take our word for it. Definitely check out our reviews. You can go on Zillow. You guys are going to have this packet in your video recording of this, but you can check us out. You can see Brian has got the 4.83 stars. Mine doesn't record the same way. I think mine's very similar to that. We have lots of reviews. There's lots of people that have used us. We're very well known in the industry. So we invite you to check out every single thing that we're saying. And even more so, we invite you to talk with us and find out more about what we do, how we do it, and how it's different and how it's going to be better for you. We're going to talk a little bit about closing costs. I like to describe it as buckets. I think people understand it pretty easily that way. When you're buying a house, there's two buckets of money that you're bringing to settlement. There's your down payment, which, as we discussed a minute ago, if you have VA or USDA, that bucket's going to be pretty empty. And then there's the closing cost bucket. The main difference about the closing costs are that anybody can contribute to it, basically, whereas the down payment's a little bit more restrictive. The closing costs are made up of lender charges, title company charges, prepaid items like prepaying your taxes, your insurance, and other things. And then it also includes transfers and state recordation taxes and things like that. Be aware when you're shopping, these can add up quite a bit. If you have a low interest rate, but you have tons of closing costs, your APR is going to end up being actually more than what you bargained for. So one of the great things about closing costs is, like we alluded to, they can be paid for by anyone. But let me stress something. The seller can help you out with these, but unless you have a good realtor that's really going to go to bat for you and help you structure a deal where they are helping you, the sellers don't want to help you for these things, okay? They're not begging to give you $10,000, okay? So we've got to work for this. You've got to have a strategy, and we will help you through that and make sure that you're going to get the house for as little money out of pocket as possible. Here's some mistakes to avoid, and I'm going to take this one because it would be self-serving if Brian did it. But the number one thing I think that you need to do is to get pre-approved. What does pre-approval mean to me as a realtor? Well, it means that you need to visit your mortgage professional. You need to talk with them about your credit. You need to have your credit pulled, and you need to give them proof of your finances. Tax returns, W-2s, bank statements, whatever it is that they need, you need to, take a day and go through that and give it to them. Because when you go after a home, if you are pre-approved and you find the home you love, you can go after it that day. If you're not pre-approved and you're just pre-qualified, then you're going to go after the home and you're going to experience a lot of heartache and a lot of wasted time. And that's why you need to get all this stuff set up in the beginning. Sit down with Brian, sit down with me, and we go over all of this stuff with you, and we get you prepared so that when you find the house that you like, you are pre-approved and you can go after it. Pre-qualified, on the other hand, means probably that your credit was pulled, probably your credit's okay, and that based on a conversation with you, you said you make this amount, blah, 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 that they feel like you can be approved for a certain amount of money. But there's nothing set in stone, and what we find probably 9 times out of 10 is that people have things on their paychecks, pay stubs, whatever, that actually helps to bring their overall approval rating down, and then they end up not being able to buy a home. So Brian, tell us some of the things that you need for pre-approval.
So, really what we're looking at is, as you said, Randy, income, assets, and credit. So for income, we're looking at your last 2 years W-2s. We're looking at your most recent pay stubs. If you're self-employed, we're looking for your last 2 years personal and business returns. We're looking for a most recent bank statement, and we want permission to run your credit. Now, having said that, we can do this over the phone, and you can scan and fax me these documents, but I'm also more than happy to meet with you either at my office or at Randy's office during the day, in the evening, on a weekend. It's very, very important, as you said, Randy, that you get pre-approved, and not really even it's very critical for you to negotiate a contract. But it's even more critical for your peace of mind, so you know exactly what you're looking at and know that you're looking in the correct price ranges for your comfort levels.
Yep. And I think a lot of people feel overwhelmed with this, literally, with today's technology. This is about 30 minutes of your time gathering these forms up. You scan them in, or you can fax them, or you can bring them to us, and we can make copies of them. It's so easy to do, so don't let gathering up a few forms, stop you dead in your tracks. Mistake number 2 to avoid working with an online lender. Rocket ships are for outer space. They're not really for mortgages. There's no, as I know firsthand, there's no pill that will make you lose 50 pounds and make you healthy and tall and beautiful or whatever. Just like online lenders, they don't know Maryland, they don't know the area, they don't know how the taxes work, and it usually ends up being a complete nightmare. Find a nice local lender, like Brian, obviously, and then work with them, get to know them, you're going to find that you're going to be able to trust them a lot better, and they're going to give you just as good a rate, if not better, than whatever you're going to get promised online. So just avoid online completely. I can't stress it enough.
Yeah, I couldn't agree with you more.
Um, also, make sure you know who your agent is. And this, a lot of people get this very confused. It's a very simple concept if you compare it to court. In court, you're going to have one side that's on your side and one side that's not on your side. Okay? If you are going to the other side and getting legal advice, you are probably going to end up in jail or owing money or something else. Okay? If you get the wrong type of realtor, you're not going to end up in jail, but you're definitely going to end up losing money. So you need to know, does the agent that you're working with work for you or work for the seller? Well, I can tell you, if you're driving around all day long, calling all the numbers on all the signs that you see, every time you call one of them, you're dealing with the seller's agent, the listing agent. This person works for the sellers. That means that any information they get out of you, they are going to use against you to negotiate against you. If they ask you, well, how much money do you have? Very innocent question. How much money do you have to put towards a down payment? Oh, I've got about $20,000. Well, you can kiss your closing costs goodbye because now they know you have the money and you can pay your own closing costs. So what do you need? You need a buyer's agent. You need someone who is not working for the sellers. You need someone who will sit down, go over everything with you, coordinate everything for you, and work exclusively for you, or as in this case, solely for you as the buyer. We represent your interest throughout the entire transaction and beyond. I tell everybody all the time, at the end of the transaction, I don't change my phone number. You can still call me a month later, a year later. You're going to get all kinds of crazy stuff in the mail, some of it legitimate, some of it scam. You may not know what's what, so give us a call, take a picture of whatever it is they send you. We are completely on your side, okay? And the best part of it is in Maryland, the seller is paying both agents. I can go into more detail of that when we're actually face to face, but you don't actually pay us our fees for working with you. So that's a great thing. What should you do now? Well, you need to get your credit analyzed by Brian first, and you may need to begin repairing or rebuilding. A lot of people I know, we just had a young lady the other day that I sent you, and I thought for sure by the conversation I had with you that Nicole was going to need some credit work and everything, and now she's meeting with a member of my team and going out looking at houses already. So it was a great story. After you do that, you definitely want to set up an appointment with our team and go over all the steps. Probably, how long is your conversation with them, Brian, about getting their credit analyzed? What do you guys usually go over?
We're going to run your credit report, look at it. I mean, the whole conversation might be 10, 15 minutes, depending on how extensive it is. And we're going to give you a plan. Sometimes it's a very easy fix. And I'll also tell you that, what you see on Credit Karma or what comes in your Discover card isn't necessarily what we're going to be using. There are different scoring models when you apply for a credit card, when you buy a car, and when you're looking for a mortgage. And I think it's also important to mention us running your credit report really should have minimal to zero impact on your score. So, don't guess. We can give you specifics. And, what we do a lot of times, Randy, is we have a special program. Let's say a client has a little bit of a low score and they have some money coming back as a tax refund and they want to use that to improve their score, right? We can give you actually a written plan. We can have your credit report analyzed with the amount of money you have available to correct it. And we can tell you if you do A, B, C, and D with this money in 30 days, 60 days, 90 days, we'll give you the exact time frame, your score will jump to X. So it's a very customized, specific plan. And you know how much we charge for that, Randy? Absolutely zero. Yep, zero. Exactly. Way to go. So, we're happy to do that. And that's just one way we bring value to our clients.
And a minute ago, you said it's going to have very little or a zero effect on your credit score. But I want to add something in on that. It's going to have zero negative effect, but it's going to have a huge positive effect because you're going to give them a guide or a plan for increasing their score, and you know how to do it. Because I can tell you firsthand, even as a teacher of mathematics, that credit does not make sense. And you definitely need someone who works in and out of credit every day to be able to analyze your credit score and be able to see what's going to help it and what would hurt it actually. Because the common person is going to say, well, credit cards are evil. I'm going to pay off my credit cards, close the accounts, and never touch another credit card again. And that, what would that actually do to someone's credit?
Well, that'll lower the score. But I'm so glad you said that, Randy, because one of the big mistakes people make is paying off collections. So believe it or not, it doesn't even sound right, right? I mean, it just sounds crazy. I'm telling you not, I'm a mortgage lender and I'm telling you not to pay off a collection because sometimes paying off a collection will hurt your score when in reality that collection will fall off of your credit report. So what does all this mean really in English? It means meet with us. Let us help you. Let us help you customize what's best for your particular situation. It's impossible in a workshop to give one size fits all solutions.
Yep. So here's what people do now. So, Brian, tell us about the best ways to contact you.
Well, so up on the screen, you see my picture. And right above that, you're going to have my email address. Feel free to reach out to me, bsachs@homebridge.com. You can also feel free to leave me a message. Let me know when a good time to reach you is. There is no cost or obligation for our services up front. It's free, and we're happy to help you, and that doesn't commit you to using us. We certainly hope we earn your business, but no commitments. So happy to help, happy to go over things with you. And how they reach you, Randy?
And so, reach me, just come over to my house. We'll sit down and have a chat. No, just kidding. So call me on my cell phone or email me. And I was just thinking this as you were telling your part there that if you can't decide who to call first, find a coin in your pocket, flip it, heads for Brian, tails for Randy, and then whoever it comes up. You're going to get both of us anyway, so you're going to win either way. The first thing I'm going to do is get you in touch with Brian. The second thing Brian's going to do is get you in touch with me. So, if you want to call him first, it's not going to hurt my feelings. We definitely need to know where you're at and everything. But the important thing is that you make the call. That's what we want you to do, is take action and move ahead. This is what we're looking for. Stop renting. And anyone who attends this workshop and buys a home with us within 100 days will get a gift worth $500 from us. And that's no joke. It's here in writing. You're definitely going to get it. And that's our gift to you for attending.
Okay. So, I thank everyone for being with us today. I hope you have gotten valuable information that you can use. And again, the first step, let's talk about your comfort levels. Let's talk about what programs are best suited for you. And then Randy will have all the tools he needs to use his expert negotiating skills and, finding you the right property in the right place. So we thank you for being here.
Yep. Thank everyone. And we will see you soon, and have a great day.